Hello, everybody. This is Victor here from Trend Following Trading for Beginners, and here's my weekly update on my sample trading portfolio coming up next. Hello, everybody. Welcome back for another week of the podcast update. Basically, there's not much happening. Just like last couple of weeks, and I've said it before. I'll say it again. The stock market, the main stock indices around the world, seems to be doing sideways trade. There are evidence, especially from Hong Kong as well, that the recent surge of the U.S. main indices around the world is slowing, and in Hong Kong particularly, it's actually gone a little bit negative, which I will talk about later in the podcast. But generally, everybody else seems to have, toppled off, so to speak, and it's going sideways trading. But there's still a lot of hopes in the market, so hoping that this bounce will continue. And I've said it before, about a month or so or two ago, saying this bounce will be quite strong. And will be, very much like people say, questioning if the bear market finished and bull market is back or something. You've seen quite a lot of that slowly coming up in the U.S. news media. But overall, as far as I'm concerned, this rebound so far is expected. If you look at Apple recently, which I am really look at, and like I said before, I have trend following system as well as a discretionary account, which I sort of trade based on fundamentals and my charting and my personal view and stuff, which is totally different from trend following. But there's something that I just note down, and I always take a trade on those one. Basically more like a balance view. The main reason is because when those idea comes up, sometimes it could turn out to be something good, and it's some ideas I just don't I just can't get rid of it in my head. So I just trade, but very small amount of it. But on that front, I seen on Apple, which if you look at the whole let's say the last year or two, when the stock market go up, Apple seems to be leading the way. And that's before the pandemic. And then now the Apple trade, what happened is in February it gone down, mid-February and so forth, and just like everybody else in the stock market, really tanking and end of March, and then slowly moving up. If you have followed my podcast, you should have make some money from basically end of March as well, going back up to the recent high. But what I've seen is the recent high, this rebound, is trying to challenge the pre-pandemic level around 330 area, that kind of stuff. And but there was a big gap there when I believe that's when Italy first shows there is a lot of COVID-19 cases and stuff. Maybe before earlier than that, there was a gap, and the gap was filled middle of last week, I believe, or maybe early in the week, and that basically also is very close to the all-time high, and that sort of is a signal to me. Basically, for me, it's not definite. A lot of gaps are filled, in rebound situation, and once that's filled, people that was left before the big last job who couldn't get out to break even or something, who just try to get out. So this is quite typical how the market works in a lot of markets and so forth. And so now Apple is more like going sideways and slightly dipping as well. So as far as I see, if this trend of Apple is showing the world in the U.S. market how the stock market is doing in the U.S., and I would think now it's time the U.S. stock market is the bounce had its days now, more or less its number as far as I'm concerned, and it's likely slowly coming back down because, it's also economics as well, that people start going back to work, and all this hope that the lockdown finishes, and there's also optimism. Lots of money, of course, pumping by the Feds, and also financial regulators from around the world. So the stock market basically gone up and up and up. But unfortunately, this kind of things will not last. it's something that I totally think is more like a temporary. It has been induced and it's gone out, which is good. And I said before, it is helping a lot of people recover a lot of their losses during February. But I personally believe that's not going to last. I said before, and also will probably will come down when the reality strikes, so to speak. People start going back to work. In US alone, it's between 33 to 36 million people got laid off or claiming unemployment from the last 6-8 weeks or so. This trend, of course, is slowing. The amount of people claiming unemployment benefit week on week, and the stock market has been taking that as a good positive. But people forget the cumulative. For the last 2 months, all those people can all of this. So let's say 30 million. It's not even 36 or 33. Just say 30 million of people in US, have claimed unemployment. Can they actually get the money from the government, for the employment benefit on time to help them? That's one big question. That's why, to me, I think it's not that readily available. So there's a lot of people relying on the food bank. And even if that amount of money is enough for them to just put food on the table, let alone paying rent and stuff. And we hear a lot of rental companies or landlords, and myself as well, facing issues, just couldn't get everyone pay the bills or pay the rent, probably partial. To me, it's quite good because I good tenants. They pay partially. They're a bit delayed, but they try their best, pay for things. So that's not affecting me much, but to a lot of other people, some people just couldn't pay. They had to think of either paying the mortgage or electricity, gas, or go hungry. So people just choose to buy food and stuff. And if you have a habit, let's say a drug habit or something, okay, I hope the last 6 weeks help you to kick the habit. But if not, you have spend the money even on booze just to drink and so forth. That's not helping either. But anyway, people will buy food and drinks, to feed the habits than paying other bills. So what does that mean to the general economy? I don't know. I don't feel people will be rational in this instance, and that's will just show up in the stock market. So all these jubilance of, hey, everything's come to back to normal now. We go back to work, we'll get jobs and so forth. I think it's misplaced. I mean, like I said, the 30 millions. How many of them actually get the old job back? It's a big question. Maybe 50%. Let's say 50%. Can restaurants or hotels or whatever company that employ them actually make a profit with 50% workforce? So 50%, let's say, a lot of them had to do extra, 2 people's job or something, and it can, with the same pay, so to speak, maybe slightly increase, or maybe probably not, because the company just under lockdown, coming back out, don't have the, most of them don't have the money. So if those one nights open, that means they have some cash reserve able to buy produce and get themselves ready for reopening, those kind of stuff. So that's fine, but to actually increase in pay, I don't think so. So those who got employed most likely count themselves lucky, the lucky bunch, luckier people bunch. At least they got a job, but their work probably will increase. The workload will increase, so to speak, and it's not going to change in my view in the short term. So from that point of view, I don't think quite a lot of the companies will not make maybe not any profit. Most likely, just get by. It will be good even to make some profit, kind of stuff. And the stock market just not reflecting that. So all this at the moment, as far as I'm concerned, it's May now. People normally say go in May, come back Grand Holiday, sometimes September, basically, because people go holiday, the market is sluggish and stuff like that. But now with the stock market, with the market in general, economy in general, under lockdown, people come back to work. I don't think they would like to just suddenly go back to basically go out and don't work, so to speak. Is what I think is kind of be different, and so we just have to see how this go. But generally speaking, I think Like for myself, I won't be taking holidays. I just continue to work, mainly because there's nowhere else to go. Everywhere is locked down more or less. And worry about COVID-19, especially if you've got kids, you might stay around home or somewhere local that is safer for yourself and for your family as well. So that's how I feel at the moment. And also this week there's, I think, President Donald Trump was interviewed by Fox News and went on air on last Thursday. And obviously, this is more for Fox News, more for President Trump. And so basically, President Trump said disappointed with China. Still a good working relationship with President Xi, but doesn't want to talk to him at this stage, blah, blah, blah. And when they ask about how relationship might end between the two countries, President Donald Trump said, I would basically cut the whole relationship if necessary. So basically everything's on the table. But it basically dawned on me that all this talk, it just said, yes, President Donald Trump can blame China, all this stuff. But like I said before, what about yourself, Mr. Donald Trump? Have you done your job, your part of the job? And it's U.S. and the West actually have prepared for the pandemic, and it shows blatantly the whole systems is not prepared. And when things happen, bad things happen, the presidency or the governments around the Western countries are ill prepared for. They probably prepare for nuclear bomb explosion, that kind of stuff. Dirty bomb attack or rocket attack or something. But a natural virus that's attacked around the world, there seems to be lots of holes and unprepared people running around. And in America, well, you just have to look at Donald Trump. One day say the virus is not going to affect America. It's only going to be 5 or 6 people or 10 people, blah blah blah, and it was mysteriously go away in April when the weather getting hotter, and then suddenly do a 180 degrees turn and take it more seriously and still blaming other people. And not helping or directing as a leader to basically directing the equipment, where should it go, how people should get tested, and so forth. And now just blame it on somebody else. And there's even an internal paper, I think some working paper for the Republicans to say, don't talk much about Donald Trump's views and what he have done for the pandemic handling in U.S., but just attack everything on China, attack, and that's exactly what's actually saying. Just blame everybody except himself. And I just think there's a silly talk. Let's go to see if he carry out what he says, and then we see how it goes. But let's say if he does, okay, don't buy anything from China, cut that off. Okay, fine. Like I said before, there'll be a Cold War. Let's have that Cold War, hypothetically speaking. Would that good for anybody? No. Would that good for America? No. A lot of what they actually set up and purchase and so forth are all done in Asia and mainly in China. It was done that way by default, mainly by the Western world, especially in this case US. They did that because they see very much a lot of cheap labor in China. And they can, basically get more bang for the dollar, so to speak. But as China coming up now, is challenging them, trying to yank themselves up from that is kind of difficult because, mainly I think because it's the population that was attract the U.S. and the West to go to China first, because it's very large, more or less uneducated workforce back in the 80s, and then now because a large workforce, a lot of stuff, equipment. Supply chains and stuff, middle bit, the assembly stuff are all done more or less in China. To actually yank those out into, let's say, Vietnam, Indonesia, Singapore, Malaysia, do they have that large amount of workforce to actually take on and also give you the similar or better quality at a cheaper price? I don't think so. China has, gauge itself and model itself to provide that cheap service for around the world to other countries. They try to mimic China, but mainly I think just the population is not as populous than China, so they just don't have that enough even workforce, even if all the rules and regulations are the same, they just couldn't take up the slack. So that's something, if America want to stop talking to China, have a Cold War, well, who's going to buy the stuff? Who's going to produce the things? Who stop? America, let's say the farming industry, a lot of it produces for export. Export to where? Southeast Asia. Which country in Southeast Asia? China. Okay, meaning is China. I'm all for, if China not doing its parts and you have to punish them by limiting certain export, let's say electronic chips and high-end services, fine, tax them on that way. But it's a love-hate relationship as far as I see. U.S. need China. That's just as much as China needs U.S. They're intertwined. It's very much like a warring couple at the moment. To try to get out of each other's arms, so to speak, or each other's bed, it takes a lot of work, a lot of pain. And I'm just saying, is America ready for that? I don't know. But let's say all does, then what? Everybody lose out. Both China and U.S. lose out, and I don't think it's a good stuff, and they might lead to war. They might more high tension to the South China Sea, Taiwan situation, Hong Kong democracy, which to me that's a funny thing about democracy. Just read and heard some other people actually say this. Democracy for the West, especially America, is gone. Democracy to me is one man, one vote, and people, the politician work for the people, and for the people, and whatever they say they will do, the politician will actually do it, and people vote for them. But did the politician actually do that? There was a lot of time. I mean, they have other party line to hold on to. So at the end of the day, it's just like Donald Trump. He did a lot of things for our economy, so to speak. But the mishandling of the pandemic show how unprepared he is and not hurting the economy. And a lot of his policy are basically more for capitalism, more for making the economy great, and making the stock market great. In essence, it's not really making America great and strong, and to my view anyway. So this democracy has turned out to be capitalism. So, to me, last 20 years or 10 years, when you talk about democracy, it means capitalism. And also use the U.S. dollar. That's what American government, to weaponize, just like sanctions to, Iran. China doesn't, still trade with Iran, so to speak. It's only one country say sanction against Iran, and like other countries supposed to follow suit. Some countries just say no. So they use the dollar as a weapon, as well as other political means, charge the Chinese Huawei company and so forth. But has always been using a dollar as a weapon to say if any other country do with this, country A is doing with country B, and country B got a sanction against it. The U.S. government just used a sanction against country B. They'll say you're not allowed to trade this country with any U.S. dollars. If you do, well, you are breaking U.S. law, and therefore you get the fine, you get punished. And being American, being the leader of the world, being a lot of countries being strong armed into certain positions, and sooner or later people will just more disgruntled and then push back, and that's what I sort of see in the last 20-30 years. But and in a way, democracy has changed over time, and it's no longer one man one vote. In my view, it's more like you vote somebody in, but then there's also all these policy groups and lobbying group, so to speak, lobbying all these politicians to do certain things, and it's not really doing things mostly to the benefit of the people, people who vote them in the first place. So just fascinating stuff. But also this week, there's I think one of the news, NBC or something in America, talks about a working paper. It's fascinating read. Basically, it's from University of Chicago Booth School of Business. And I believe that's Stephen Davids. And it's a working paper about the pandemic, how it changes people, the way it works, and how the U.S. policies changing things. It's fascinating read, and I think everybody should have a look. And I will put at least a link in the bottom of the description of this podcast. But basically, I think a lot of these jobs, I mean, even this paper said, up to 42% of the job loss might never come back, become permanent. I mean, even let's say 20% is still a lot, hell of a lot. And is some company just might not make it. That's more or less the truth. Others might be able to continue, but also the shift of working, like us here. Restaurants are closed, even McDonald's and KFC's many closed, only some are opening. Those are not open using deliveries. That's the norm. The supermarket seems very buoyant, taking on loads of people because they do a lot more online sales, take a lot of online orders and do a lot of deliveries. So those one who can adapt to the changing situation thrives. So Amazon thrives. You can actually see in the stock price and stuff, Zoom and stuff, and things like conference software and stuff. Those are getting better. But other like cinemas, hotels chain, service sector, even cleaning are not doing that well as far as I'm concerned. And this paper talks about it. It's very useful. And what this paper basically useful is it gives you some fundamental view. Okay, it might be biased, and we just what they think, and maybe it's just a working paper, but at least it gives you a peek of how things might turn out. And personally, I think this bounce back, I said it before and said it again, it's just induced by the U.S. Fed, and got so much money is pumped into the financial system. They had to go somewhere, and in this case, they go into the stock market. Some of it definitely end up in the stock market, and things gone up. But like Warren Buffett always said, short term, the stock market is a voting machine. So everybody at the moment is voting for recovery, great recovery, and yeah, it's got the stock market make some money. But long term is a weighing machine. So long term, as far as I'm concerned, it's not that long term. It's got to come in basically second half of this year when people start to come up with the profit reports from March, let's say from March to June, and then from June to September. So Q2 and Q3, basically second half of the year, we'll see those reports, and reality basically will struck and come and say basically the stock market hope for quick recovery of the market and economy in general is basically a bit misplaced and probably take much longer. And I think from June, July onwards, we see a lot more fluctuation in the stock market. It's just my hunch, but what does that mean basically? I mean, as a trend follower, as a trader, what does that mean? Basically, that would show you which market, to me anyway, to watch out for, and especially now when things are gone hunky-dory and are now going to be sideways. You have all this time to prepare yourself to see what else might be coming down, that kind of thing. And it's also time to follow your system and watch your system more closely, to me anyway. So let's say you're always tracking Apple, pay a bit more attention to Apple on a daily basis. You don't have to do much. Just make sure that your normal habits of checking your trade once a day at the end of the day, do that. Don't miss it, because things might move quite fast. So just keep an eye on those. And there's other sector you might be able to to make money out of. I mean, like for example, banks. I have a couple of tweets with other people arguing about, the stock market is rebound. The banks got a tank, blah blah blah, and people say no, this is not same as 2008. The banks are okay, fine. Yeah, I agree. It's not going to be the same thing, like because of prime market issue. But there's a property market issue. For example, and the properties in two fronts for residential as well as commercial, because people just don't have the job, so they can't pay, and people are working from home. So what do they need so much commercial space to host the workers anymore? Let's work from home. So on the commercial property front, there are probably a lot of lease being, discontinued, not renewed, or basically not paid out because company just collapsed, so to speak. And on the residential front, people have no jobs, so they cannot pay the mortgage. So directly, it's going to affect the banks, who holds a lot of mortgages, both residential and commercial. And the bank's got to tank a bit. If you look at bank shares, it's already start moving sideways, and some of it are already coming down. and you just basically take that and then go and do your research and check those banks in this particular sector who are very strong in the property market, both retail as well as commercial, and then have a look and then see you can make some money out of that using your trend following whatever system you're using. That's focus yourself. So that's what I use for anyway. So at the end of the day, fundamental is in like a background indicator. It's more like the whole market's moving or not. We are trading price, end of day price, but behind end of day price is emotion, people's emotion. So we're trading money as well as trading emotion. So fundamental will catch up with the emotion sooner or later. We show up in the price, and basically we watch out the price, we get ourselves prepared mentally and don't deviate the rules, and we can just make money out of that. Fundamental, we just help push that move, the trend, the direction, and we don't care what direction, up or down or sideways. We just watch out. The problem here is if we have a long period of sideways trade, we might not be making much money as a trend follower. But when the trend comes, either go up or down, which to me is very likely to down, maybe biased, but let's see how things turn out. Then we should at least be ready for the move. Doesn't matter it's up or down. Be ready to catch the move. It makes a lot of money. Especially now, I'm sorry, you might be feeling like making money out of dead people, things like that. But market is market. You're here to make money. You're not here to be right or wrong. You just have to prepare yourself. So at least this trading give you an alternative to have some incomes, and you get able to buy food and put food on the table. So there's give and takes, but as far as concerned, it's just trading. Trading will be will be for the rest for me. Just I will always do that until maybe until I couldn't function with my fingers or think properly. I'll just continue to trade. So anyway, without further ado, let's have a look at this week update on my sample trading portfolio. Coming up next. Okay, first off the bat is Apple. Same as last week. Short term is a buy, medium term is neutral, long term is a buy. But like I said before at the start of the podcast, I think you better watch on this one. If this is a leading indicator of the general stock market in the US, then I think we all need to put attention to it. Just watch out is filled up some of the big gap, and I think similar to Facebook as well. Watch out on Facebook as well. I'm not tracking on this update here, this portfolio, but Facebook is another one to watch out. So watch out this too. Next is Amazon. Sell in the short term. Basically, long term is buy, medium term is still a buy. So this one have gone a bit sideways. A lot of people say, yep, which is also correctly say so as well, that Amazon is making lots of money. But remember, it said in the last update, quarterly update, it said it will spend most of its profits, basically round up its own internal capability to tackle the coronavirus. And they go spend quite a lot of money on that front to safety of people, but also there's also disgruntling with within Amazon warehouses, workers, so to speak, and the way they treat people. And they saw on the news, all over the news in the US, and I seen it on YouTube. And so short-term wise is a bit on a sales side, but medium long term with the underlying sales of people going on the internet and buy sales things. I think this will just continue. So short term for Amazon is a sell, medium long term is still a buy. Next is Australian dollar against US dollar. Short term is a buy, medium long term is neutral, so same as last week. Crude oil, short term is a buy, which changed from last week anyway, but also medium and long term now because of recent price surge is basically gone neutral. Similar to crude oil, WTI, short term is a buy, medium long term is neutral. So these two things are what I said before. As people going back to work, there will be economies in general, truckings and stuff and trains. It's got to use a lot of oil, one way or another, a lot more than during the lockdowns. And of course, there's recovery. To go back to the pre-pandemic level, I don't think so, because not just there's still too much oil being pumped out into the world, but the major usage of those oil, like shipping, like cars in general and international flight, even internal flight within a country. Until that sort of comes up a bit more, you won't go to see much of recovery on the oil price. But in the short term, it's definitely a buy. But you actually think of going back to 40, 50 level just like before the pandemic. I don't think we'll see that for the next couple of years, but we'll just have to see. So this funny talks of couple months ago, about a month or two ago, I talked about the CME doing funny things, allowing crude oil go negative, and some people even say, well, in the May, the June contract, which is in the middle of it, just passed, will have another negative event, or even some say minus 100. That never happens. It's more like scaremongering. It's very telling, isn't it, in the stock market in general, especially the financial news. When the market is in the bull trend, they keep on taking people with bull view on and they basically talk up the market. And the downtrend happens, they do the reverse. When the market is tanking, they keep on bringing bears and say how bad the country might go down on stock market and so forth. Hardly, there's still some bringing some with the bull thinking, but a lot more emphasis on the bear side. So this is the same thing to show how people ridiculously say, crude oil WTI can go minus 100 or something. Is basically misplaced. But to actually think that the crude price will be bound to a very high level, I don't think so. But a bit more, logical level, just like what Warren Buffett said. At the end of the day, the stock market is a weighing machine. There's just not enough traveling and consumption around the world to take up those oil. Okay, U.S. is forced to cut because of job losses due to the sudden oil price problems as well as pandemic. There's the same thing around the world. So even the oil output being cut from around the world, I do not think it's going to help much. So that's just my 2 cents. We'll just have to wait and see. Next is DAX from Germany. Short term has changed to sell now. This is similar to Hong Kong, basically, which have turned to sell last week or something. So DAX also changing as well. Medium long term changed to neutral, more or less a sideways trade, so there's nothing much happening there. Dow Jones, short term is still a buy, but medium long term is neutral. I said before, it's still on the short term buy zone, but just, in my view, just going sideways, not really doing too much at the moment. FTSE 100. In the UK, short term is a sell, just like from last week already turned. Medium long term is neutral. Gold is buy, and short term neutral in the short term, medium term, and still a buy in the long term buy. So that's good. That's just continue. Hang Seng in Hong Kong, same as last week. Short term is a sell. Medium term is neutral. Long term is still a sell. Nasdaq is still a buy. All these technology companies, especially the ones selling things online, doing video games and online streaming, are doing well. So in general, the Nasdaq is very good at the moment. So short term is still buy, medium term is neutral, long term is still buy. So this one, we just see how it goes. Again, it's going sideways. Gone above like around 9,200-ish, and then come back down to about 9,000 or just under 9,000. So within the 200 marks level, up and down a bit. So just basically going sideways at the moment. Nikkei from Japan, short term still buy, medium long term is neutral. Silver, just like gold now, short term is become a buy now, especially last couple of days. So gold, Thursday and Friday just showed up a bit more. So just follow a system. For silver anyway, just do it about turn. So it did trying to go up, but it couldn't. It's having difficulties beat the 50 days moving average, I believe, and just couldn't stay above it and just continue staying below it. But now suddenly, it just moved up along with gold now. So it's trying to do a catch up. How far will it go? Nobody knows. You just have to wait and see. So short term for silver is a buy, medium term is neutral, long term is also neutral because of recent surge. US dollar against the Chinese yuan, basically buy across the board, short, medium, and long term. That basically means, I suppose due to the pandemic plus the trade war, Chinese yuan is basically still weaker than US dollars, and it's quite logical they're emerging now, coming out from the pandemic, lockdown, and then at least people are start working again. But the supply chain is slowly coming back to life, but the demand side is gone. People are still under lockdown, or very little things being sent around the world. So we just have to see how it goes. US dollar against Japanese yen. Short term is a sell, medium term is neutral, long term is a sell. So in that case, that means Japanese yen is getting more, being purchased more than US dollars. So this is slowly showing, and it's under 200-day moving average, I believe as well. So that's why the long term is a sell. So this slowly showing people are moving to more safe haven currencies, just in case. So this is most likely because people in general, don't really believe the rebound to be long term, stay that way. That's why the people go away and just go to buy Japanese yen, and also a bit of a bond to try to just safeguard. A bit of hedging is going on. British pounds. Next is British pound against Japanese yen. Sell. Short term, medium term is neutral, long term is a sell. British pounds against US dollars also sell now, changed from buy to sell last week. For short term, medium term is neutral, long term is also sell. So for British pounds anyway, I think it's similar to US. We have somehow similar policy here, that we are coming out of the lockdown, and we also try to cover, give small company loans to try to hold people, workers, so they don't lay them off, that kind of stuff. But I think that's also got extended, that paying £2,500 for each employee is being retained by the company that is affected by the pandemic. Basically, this 2,500 costs a lot for the UK government, and that has been extended, I think, from end of June to September or some end of September. So to me, it's basically just more delay effect, and this delay effect is very much applicable to US or around the world. So all this delay effect means that when that policy changed, let's say the government say, I have enough, I couldn't continue to hold on. Let's say October comes, they didn't extend this, so a lot of company will be forced to say, okay, I might have to start up to start again after lockdown. Will I have enough income to even cover those workers? Some of it is very much questionable, and it applies to both UK and US around the world, especially those who are at airlines. I mean, I think the paper I talk about, the working paper, talks about airlines. A lot of in US they have this loan to small company loan or something, gave out to the company. You retain the people for the next I don't know how many days. This loan is is forgiven, so to speak. But the main thing is, once that's gone, when that policy is gone, people start, companies start firing people, laying people off. So all we have seen basically, this is also a policy-induced, delay of unemployment. Probably we'll see a lot more coming in second half as well, when this adaptive, very accommodating policy change. It might be further down into 2021. Who knows? But we just basically see there's might be some delay things happening. Just my 2 cents worth. Next is Bitcoin. Short term is a buy, medium term is neutral, long term is a buy. There's a lot of talk here on Bitcoin market. Basically, say 10,000. Once it's broken down, we go up to the moon. Blah blah blah. Some even claim 20,000, just like gold going to stratosphere, so to speak. But I don't believe any of it until I see it. It could happen. Who knows? But Bitcoin definitely, I said a couple of weeks ago, is having a bit of problem breaking above the 10,000 mark and stay above there. It's challenging them again around the 9,000-ish level. We just have to wait and see. It could well be bounce off the 200 days moving average and go up. But I think something have to give. We don't know. And as far as I'm concerned, I stay with the trend following system. Short term is definitely a buy. Long term is a buy. Medium term is neutral. It doesn't know what's going on. So I stick with it. If we see a big breakout above the 10,000 mark, then I think that, and stay up there for at least a week or something, I think there's definitely more to come and go higher. But to 10, 100,000, I don't know. I hope it happens and we all win, so to speak. Last but not least, is TLT, the ETF that tracked the bonds, U.S. bond long-term market. Short-term, same as last week, is sell now. Medium-term is neutral, long-term is a buy. So people got, in general, I believe, is more comfortable with the rebound, and they, stick their head out, so to speak, and go back in the stock market, and then obviously the pressure on the bond market is a bit more, so that's why it's a lot more selling going on. But will this last? I don't know. I just simply feel that there's a lot of storm coming. We might be in the eye of the storm, until people start fully going back to work. We got a couple more months of data to look at. Is everybody else's guess to see will the economy recover to the extent which I don't believe to like before the pandemic. We haven't got no vaccine. We have social distancing. We haven't even got enough testing. I mean, UK is the same. One thing fascinating is how the hell South Korea can check so many people so quickly, and how do they do that? And it's something that why we Western world cannot just even borrow that test kit and just talk between governments, say we borrow this maybe a patent test kit, and just borrow the manufacture locally within America, within UK, within Europe, and basically just use just what American Donald Trump did, signed like a war executive order or something, forcing pharmaceutical company within US to manufacture this very quickly so that people can get tested. I don't know why US just want to do that. So is UK. Until they got their own little kit developed. Maybe they just don't trust the South Korean test kit or something. But to develop test kit, it takes time. To this day, we still don't have enough going around, and not enough supplies going on. And I just feel like all these talks about blaming China, blaming everybody else, it just show a blatant hole in the Western world, the medical system overall. Where stop talking about China, okay? Stop talking about this virus. I'm from UK. We have seen a lot of underdevelopment, underfunding within the NHS, the medical sphere, okay, the professional. I have doctor friends who have to see a lot more patients and starting to do a lot more online as well, and they work long hours. Even new doctors have to work very long hours, and that's not enough people going into profession and full stop, just like teachers, because the pay is bad, a lot of work to do, and no recognition, and you need to work very long hours and stuff, and it's just not attracting people. And successful government in UK have undermined the growth of the NHS, just like the police force as well, the army as well. So let's stick with the medical side. You can blame China or another country or Martians all you want. The politician within each of our country, UK in this particular, didn't do his job. We want to send people to war. Iraq, Iran, and whatever other things. Okay, it's good that we also give money to other countries, but how about us? I always love this quote from Oprah Winfrey. We have to fill ourselves up first before we can help others. Very much this is the airline syndrome. When you go like altitude and then suddenly there's turbulence and the oxygen mask comes on. First thing first is the always instruction is you cover your mouth first with the mask. Then you help the next person beside, even if you're a child. It go against the grain, especially for the parents. But if you cannot be safe and conscious, how can you help the child or a person next to you, or loved one next to you, or help other people? You can't. So same thing about here NHS. Stop talking about how bad other people is. We ourselves haven't even do our own job. Okay, this is just my little rant. And for UK government, dare enough to say point finger to others. Yeah, fine, go do that. But at the end of the day, remember how many fingers, when you point out one finger to outwards, there's 3 fingers pointing backwards to you. I think both US government, the West and UK, need to look at how we look after our medical profession as a whole. And it's just not good. Keep on saying other people is bad and say we haven't got enough equipment. I hope they learn from this episode, so to speak. Very dramatic, very sad episode, and we'll bring some of those equipment back in the UK and actually manufacture them. Yeah, it costs about more, but where's our stockpile? I'm sure this is just like food. It's very important, don't we? We haven't even got enough equipment, let alone our clothing. Those simple clothing stuff. We go rely on China. Yeah, everything China or Southeast Asia. What about us creating some for ourselves within UK? Same thing for US. Stop pointing fingers to other people. I say to the politicians. I say after this pandemic that sort of recover a bit, we need to really sit down and seriously think about how we can cope with possibly another virus, which we definitely come. It's just natural occurring, and how we actually prepare ourselves. And I hope to God really, if myself personally, I would definitely do that. If this current government, okay, is not going to do this, and I just vote somebody else next time, because I think this is too big of an issue that had to be ignored by politicians. It's basically that our health service is UK is supposed to be the best health service around the world. Okay, compared to US, blah blah blah. We're supposed to shining light. People are supposed to copy our model. What happened over times? We crumble, just like our armed forces and police force and all sorts of things. It's about time to stop this silliness around the world. Look at their own countries, how they handle their medical problems, and how they equip themselves with the right level of kits, equipment, so that when another pandemic comes, it could be anything, at least they got enough clothing and masks. Those are very fundamental, and gloves. Why do you say everything China? That's just my 2 cents, and enough ranting for now. And I hope you like this podcast. Sorry about this rant, and I'll speak to you next week. Bye for now. Ciao.